Yo guys, JClem here. We are back with another video. This video is going to be on POI selection slash order block selection. Now, I never found there was a problem with this because I was always very systematic when doing so. So for me, right, let's just draw some market structure, for example, right? And for me, right, I always wanted to be trading from the highest probable areas. So then you might say, okay, well, Josh, which are the highest probable areas? So we have a breaker structure, we have a breaker structure, right? Now, what you will find is price after the breaker structure will obviously pull back. Um, so I love trading in the lower 30%. And if you obviously flip this to a downtrend, the higher 30%. Why? Number one, because it's the most high probability area to see a reversal. Obviously, that would be pro trend, right? So that would take you in the pro trend direction. And it limits the amount of trades, it limits the amount of losses you take. And usually in this area, there's a maximum usually of two valid levels, right? So I can be sure that the maximum amount of losses I'm going to take is two, because I might take a loss, say if we've got like a level here, and price ultimately respects it a little bit and then comes down, I might take a loss or a break even here. Um, and then I take the next one, and ultimately this is the one that puts in a higher high. That's absolutely fine. I'm 1% down here, but I've taken the next entry, and now I'm up, say, 10%. And if this whole level was to fail, that's absolutely fine. I'm only down 2%, and then I can just wait for price to pull back into the top 30% here and take the sell again with a maximum of only two areas where I can be wrong on. Basically, trading's a maths problem, right? You need to limit your losses, and you need to find a way to make your wins bigger and your losses smaller. The easiest way is to obviously make your losses smaller or make your losses less. A byproduct of that is your profits will then go further, if that makes sense. So let's just obviously follow this price action here, right? And you see, right, we have a break of structure here. So what do? Right, we draw our gap box on. Where does price come down to? It comes down to the lower 30%. Lovely. So we take the trade along, and ultimately this level just fails by a tiny, tiny bit. So either you take a break even or a loss, but you can just hit it again, right? Because it's that high probability area. And then price goes on to give us another break of structure here. Of course, price doesn't pull back then, but it doesn't matter because you're in this long, which runs 263 pips. So ultimately, it doesn't really matter. Then we just follow price along again, and we give another break of structure here. So what do? We draw on our range, right, from the lowest point before the break of structure, which is here, to obviously the highest point after the break of structure. Where does price return to? Price returns to that lower 30%, gives us a trade, but ultimately the level failed. So, either you took partials or you took a break even here. That's absolutely fine. It doesn't matter. Um, so like obviously then like we go bearish here, right? So what do we need to do? We need to draw on our premium discount with our GAN box, right? Like so. It's not perfect, but whatever, you get the idea, something like that. Oh, and we then look for our areas within the top 30% here. So here, right, literally I had two areas where I wanted to trade from. One, and this wick being two. I didn't want to trade off this because it was already mitigated by this level. Yeah, so anyway, I was asleep here, so I actually missed this short, but that's absolutely fine. Say that you did take it, it ran like I think 60 odd pips. That's fine. You take a break even or a small loss, doesn't matter. You get back in the sell here, right? And this is where the power really happens, because you see you just hold it to follow the trend and break structure, and you're up 300 pips. And the good thing about being in the top and bottom 30%, especially when trading pro trend. So look how many entries this gave. 1, 2, 3, 4, right? And none of these highs violated each other. So you see here, right? This high stayed intact. This high stayed intact, right? And this high stayed intact, right? So if you just took a sell here, right, and just covered this high, that's fine. Then you can take another sell here and cover this high. Take another sell here and just cover this high. When price comes back, take another sell here and just cover this high. And then you're stacked in a pro trend move with 4 positions, and then they all run, what are we up now? 450 pips. Just because you were disciplined about trading from the top 30% of the range. So this is why I love these levels. I only trade out of these levels, especially on the 15-minute time frame. I just tend to follow 15-minute structure. Yeah, I genuinely, I just love it, right? And you see price even comes back here and respects, obviously, this last internal high that we had. The big news event, but ultimately price respects this high because we are pro trend, and it's where obviously the banks want to take the money, is they want to take it shorter, potentially to follow with the higher time frame trend, which is down here. So if we now look at the 4-hour time frame, because obviously the markets are fractal, so they do the same things over and over again. Like I would denote this as our range. Where does price come into? Like, as you can see, the reason I denoted this is because this wick just takes out this high. So I use wicks for structure break, or breaks of structure. Where does price seek? Price seeks that lower 30%, right? Price comes in. Ultimately, yes, we didn't respect anything here. However, we can wait for the 15-minute time frame to go bullish and then use those same concepts again to catch trades. Ultimately, I do think this is, trapping early buyers, as obviously we haven't seen any like significant liquidation on the way down. So potentially we're going to come into this extreme and then pop from there. But it's just a very simple, repeatable process, right? Let me now go to the 15-minute time frame on GBP USD here, right? Now you will see, so obviously we break this high here, so we can then draw. Let me just delete all this stuff. Right, we take out this high here. Now we're waiting for a pullback, right? So where does price ultimately come to? Oh no, that's not the range. The range is to there. Price comes into that lower 30%, into the extreme, and just wicks the high. I actually took this trade. I took profits at the high just because I didn't really like the price action. And then, ultimately we took the low, and then took the high. This was just a bit of a mess on GU, to be honest. I didn't take any of these trades other than this sell here, which I have highlighted in another one of my videos, right? What do? We break structure, we draw our range on here, right? Price never touches the top 30%, but here, right, we just wick into the top 30% and we sell off. So I was in this trade, I took it and I took like 7R on my funded accounts, and then I closed down here for like 11R on my personal account. And then you see, right, what do? We then break this structural high, and where does price come back to? Oh, look at that. Price comes back to the lower 30% to then go long, right? It's a very consistent approach. So in terms of POI selection, I only look for POIs which are in the top and bottom 30%. Now you might be saying, oh, well, what happened here? We have this break of structure. Yes, we did. And ultimately, in this case, we didn't even come back to the EQ, let alone the lower 30%, which is why I did not take this trade long. Nothing in the market is 100%. You need to understand that. Everything has a probabilistic nature. So this doesn't work every single time, but it will keep you on the right side of the market and in the right trades 70 to 80% of the time. I've done the testing on this and it works very, very well. Again, you see we have this break of structure. So we draw on our premium discount range. What does price do? Price comes into the lower 30% and it pops. Again, lower 30% and pops. Ultimately, the market wanted to go bearish, but that's just the nature of the market. Like I said, nothing's 100%, but I did take this trade and I took 5R out of the market. You can check my Twitter. I called this level early in the Asian session, and then I took this trade in Frankfurt session and made $5,000. Just took a nice 5R. It was Friday. I call it 5R Fridays. Follow me on Twitter. I'll link it in the description below. But yeah, that's just a very simple video. How I like to select my POIs, my order blocks. I just find it very mechanical and a very easy way of following the market. Hope you enjoyed the video. Hit that subscribe button and I'll catch you in the next one. Peace, gang.